Most of us have done something at some time to bruise our credit rating, perhaps without even knowing it. A later missed credit card or home mortgage payment is just one example. When you buy a home, you will be encouraged to get pre-approved for your mortgage. During the home loan application process, these issues often come to light. What is a good credit score? Mortgage companies use consumer reporting agencies, CRAs, or credit bureaus to assess a buyer's credit rating. Credit scores typically range from 300 to 850. For a home loan, a score of 650 or higher generally indicates good credit history, making it easier for you to secure a mortgage. If your score falls between 620 and 650, your borrowing capability will be examined more closely. And if you rate below 620, you may be required to have a larger down payment or a lower budget. If you discover that your credit score is low, don't despair. Although it may delay the purchase of your home, there are ways to repair your bad credit rating so that you may still qualify for a home mortgage with a decent interest rate. To evaluate your credit rating, you'll need to obtain copies of your credit reports from the various agencies. Examine them carefully to see what transactions are lowering your score. A special note about bankruptcies. A bankruptcy can lower your credit score by 200 points or more. Repairing bad credit following a bankruptcy is beyond the scope of this seminar. Charge-offs appear on your credit report if a creditor has given up trying to collect from you and has written off the amount you owe as a bad debt. Charge-offs are one of the main reasons loan applicants are denied credit. If you have any charge-offs, contact those creditors immediately and make arrangements to pay off the old debt. After a few months of regular payments, or if you repay a charge-off debt in full, submit a written request to that creditor to change the status on your credit reports. Late payments may be handled differently if they are isolated incidents or a recurring problem. If you have a single late payment listed on your credit report, it is best to contact your creditor by phone to discuss the situation. Follow the conversation with a written request to have the isolated late payments removed from your reports. If you're consistently late with your payments, repairing the problem is a little more involved. You'll need to begin to set a pattern of paying on time over several months. Once this positive pattern is established, call your creditors and follow up in writing to let them know that you're back on track. With persistence and patience, you may be able to delete these score-lowering marks. Reporting mistakes. Sometimes, creditors simply make mistakes when reporting to the bureaus. Such mistakes might include charge disputes that resulted in initial late payment that was eventually reversed. Unfortunately, it's the individual's responsibility to spot and repair reporting mistakes that lead to bad credit. Once again, contact your creditor by phone and follow up with a written request that the mistake be corrected, because the Fair Credit Reporting Act, FCRA, requires that credit agencies and their information providers investigate reports of inaccuracies. You'll also want to contact the CRA directly to report the discrepancy. As you work on repairing your credit rating, there are other things you can do to improve your score. Make sure that you pay all monthly bills on time. Avoid new credit card accounts, including department store cards. Work to pay down your unsecured debt, but keep accounts open even if you pay them off. And pay cash for the things you need instead of charging them. If you still score below the 620 mark after all of your efforts, it doesn't mean that you won't qualify for a home loan. It may mean, however, that your mortgage will take longer to process, or you may need a larger down payment, or the terms and interest rate may not be as low as you were hoping for. Talk to your Palm Harbor representative about referrals to high-risk lenders. Repairing bad credit can take many months to a year or more, but when you're ready to buy a home, you'll be glad you took the time to improve your score, and your mortgage payment will be lower because of your efforts.